Maximus analysis here for July 26, 2016, and we had an indecision day. Slight pop going into, I think Apple's earnings just fired off and they did pretty well. So, and not really, again, you got to keep it all relative, which I'll show you when we get to that chart. Um, Looking when they break 2151, which would be last week's low. Again, you can look on the weekly chart and see that we haven't really moved that much. Tomorrow, you can see it really hasn't moved that much. Tomorrow, again, we have FOMC at 2 p.m. You have, for your crude traders, intraday guys, you're going to have your EIA report. Okay, we have levels that I've put on the newsletter and I've also posted them on Twitter. Can't really do much more for you then. You should see the pattern that potentially could come up. We have basically, if they don't hold this line in the sand bulls, it could go back to the $26 area. Highly unlikely, high low probability, but I'd rather you be prepared than you not be prepared going into something like that. So let's keep our eyes on the price. Right now, we're looking for the pullback to get into the 2134 area. Why? Because everyone took the breakout here. Don't want to be the crowd, don't want to be the herd, because when they pull back, again, you're going to see a lot of buy protection stuff. That's kind of almost like an inverse indicator. The TV guys, the upgrades, the downgrades, you will find that if you plot them out, when significant stuff had upgrades, you would say, like, this doesn't make any sense. I give you an example. Daily time frame for Priceline. Sorry to deviate real quickly, but I just wanted to show you that there was upgrades here. Now, again, it was before before Brexit. But one needs to keep in mind that this would not be where you want to buy anyway. There was $1,500 price points, and it gapped up because of that. You can see this based on this candle, it gapped up. Once that came in, I shorted it, and it worked out. But again, don't look at where these people will say, oh, such and such analysts upgraded, Goldman upgraded, but where did they upgrade it? Because if it's not in a significant area that is supposed to be a buy period, it doesn't line up with your strategy, don't take it, because most of the time they're trying to fill somebody else's order. That being said, you see in the weekly right now, we have a lot of news coming in tomorrow on Wednesday, midweek, and we'll continue to look at this. Got a real big spike right here on the well, not spike on the weekly. So again, it's about keeping things in perspective. We have not taken out these highs of 47.39.5 that were back in late November of last year. So we can see that we have, this will be the fifth bar on the weekly candle. So again, this is not the time to go long. You want to see what the retracement will look like. What else do we need to see? Again, I don't really do YM. Why people say, oh, why didn't you look? Do you hate the Dow? No, I don't hate the Dow. It's only 30 names that get whipped around. Once Apple went into the Dow, I was like, you're not going to get the action you had before. It will still move, but you're not going to get the action you had before. Dow is not, to me, something that should be viewed extensively. You should be looking at the S&P 500 exclusively, because it just has a lot more names and represents more of the thing. The Dow is what they put, and if you look at the news, as effed up as this is, you watch the news, you're going to see that sometimes they don't even put the S&P 500 up. They just put the Dow. It's a way of showing the masses, because remember, it's 30 stocks, so Goldman could be up $44. Everything else flat, the Dow will be up 50. And the weighting is kind of goofy and stuff like that. But again, just sorry for my little rant, but again, I just want to make sure that everybody's getting truth on this channel. You have crude. Crude is continuing down. Again, we see our price levels that it needs to hold to get and keep this inverse head and shoulders pattern at bay. I have a turn week of this week, so I want to see what is going to happen at the end of this week for crude. Gold kind of was just a flat type of day, nothing crazy. Again, I'm looking for them to retest the 1300 level, because I think that it's just a lot of stops under it, quite honestly. And that would be a nice level to get in, versus now 1287.5 is actually the ideal place where I would like to get in some names. So let's look and see what is going on with Apple right here. So let me explain to you. So I got the 15-minute up. This is the 15-minute. You can see how far they have come up. Okay, they are up very big in regards to 101.65. Okay, so let's look at the chart on the daily. Let's put a little marker here so we can kind of see where we are. Then let's look at the daily time frame. So they're going to be around this region when they gap up. Okay, let's make sure that we look and not get too excited, but look to see what we have going on in that region. Now let's go to a weekly and see what that means to me. Weekly means that they're going to have to get above this level, which was previous highs, was another breakout area, and we have to see if they're going to close above this area, because last week we had a little shooting star pattern and they're above the high of that. So is there a short squeeze that's going to happen? I want to see how this candle closes. I don't want this candle to come anywhere this week below 100, because then there will be the fake out. So if you're a bull, your line in the sand is this 200-day moving average. Okay. Also, you want to make sure you have a target. My target would be probably where it opens. I would probably take off some and leave runners depending on where you got in. Okay. If you got in based on right before the close and you're up, honestly, I would get out, or I would roll my stop to, say, 97. I would take majority position off and keep the runners. It could be options. It would be in the common. You would be fine with doing this, but that's what I would be looking at regarding that. Now let's take the other side of the coin. Go back to the daily, and let's look at Twitter. See where Twitter is right here. Okay, well, let's break it down to see where they are right now. 15-minute, boom. Okay, they're down at $16. Okay, now I put our price level here. Go to the daily. Say, okay, that brings us back into some type of place that it was churning and broke down and retraced up to the 200s. That puts us at this area right here. Do we have anything to the left to really support it? No. Let's go to the weekly time frame, see if what it will look like on the weekly time frame. Let's go back here to say that this candle will be opening around here, which will make it an engulfing type of pattern of 3 weeks. Again, you don't want to go immediately long or short, because guess what? If they can hold this area, again, if you're in the short, I get it, and I would continue to hold it or take profits. But what does this look like? If they close here, what does that mean? So I want to see where this closes for the week, because if it closes down, you say, all right, this one's a little bit harder because there's nothing left underneath. So you have this low, and you would have a pivot if it closed lower of an engulfing pattern that would engulf 3 of these weeks. Okay, now if they give you something similar, okay, if they give you something similar to this candle on this side, remember, they're right here. So they're really coming back into the support level right here. We want to see how this week closes, because we have this level as support underneath, and they're not even close to it yet. The last buy signal on the weekly was around this area as well. So it's around the $16 level. Again, I want to make sure we're keeping ourselves honest here. We got the 15 right there. It's 16.71. Okay, they might be a little dead cat bounce into coming up, because a lot of people will want to go short. But if we're looking at a longer term chart, I want to see where they close on Friday. Because if it closed near the lows and you're like, all right, this is a high probability that they're going to come back here. If they get here and bounce and stay within this area next week, then we'll probably start seeing a lot of inverse head and shoulders talk. So I want to kind of prep you for what's going to happen. And if you can't see it, I know I'm running long on time, but I just want to do some education stuff. You have the left shoulder, right shoulder. If it closes up, this will actually be where, a lot of people want a higher shoulder on the right side. So we'll continue to see that, and then see what next week will bring. Again, you definitely have your line in the sand, and based on what the price action is now, you got about $3 worth of risk. So We'll see, because everybody's going to want to get short. Remember, I told you, don't be with the herd. Sometimes the herd will get you stuck. So again, keep this in your mind, as weird as it is, because a lot of people won't think like this. They're going to go short, and they might get squeezed back up to 17, 18 quickly. So again, we'll see. It's only $1.30. So don't, that it seems far-fetched, but it's not. So let's see where this goes for next week, and see how, see what happens at the end of this week, and see how thinking slightly different is going to play out for this one. All right, take care.